Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on euro currency. So just yesterday we discussed this tricky situation on euro currency, actually not only on the euro, on the gold, approximately the same story. And we said that market keeps door open in both ways, and this is a very common thing when market is preparing for important event, which is the Fed statement. And yesterday I asked the question on the hourly chart. When we talked about the hourly chart, I said why we can't get the downside butterfly based on the price actions that we discussed, and indeed this butterfly has been formed. So what I would like to say by this is that in the current circumstances, guys, in general, the safest way to act, to be honest, is just to wait results of the Fed. Because if we will get some response on the strong support, the confidence support area that we have on the weekly, it should happen and it will be relatively significant. So if indeed we will see a reversal and market goes to the new top here, as well as on the dollar index market collapse and starts moving to the 87.4 target, that will be really extended action. And from that standpoint, trying to catch the falling knife and to get just the perfect entry point, an optimal entry point, it could be rather costly in the current circumstances. And in this environment, it would be better to wait for results. Speaking about the opposite action, with the downside, if Jerome Powell will tell nothing, as it was here and we talked about it, this will be already the repeating of the same that has happened a couple of weeks ago. And that will be not something new, because if Powell will tell nothing about the interest rates, this will be just repeating of the same story that we've got in the previous meeting. And market currently, at some degree, already prepares to that it could repeat the same thing. It means that the downside action, in the case if it will happen, it might be not as strong as it was previously. It might be shorter, and even market will be able to hold about 1835 major weekly support. So I will not exclude the chance that we could get a kind of the catalyst some double bottom or something of that sort here, this type of action. Maybe 127 head and shoulders will be formed later in the moment of the reversal market or something. From that standpoint, the downside potential relatively limited currently. But for the taking the long position, you could try to get more risk and try and take position, anticipate the market trying position right here or placing stop below it. It also makes sense, but it mostly depended on your personality, how you feel more comfortable with dealing with the market. I'm trying to explain. So on the fall time frame chart, take a look what we have. The triangle pattern that yesterday in the first glance was looking like the bullish pattern, and we talked about it. This market stubbornly stands above the support. You can see it has been broken recently to the downside. Market has formed a reversal, bearish reversal candle, creating the new top and dropping below the lows on all this consolidation. If we wouldn't have any Fed meeting, in the current circumstances, I would say do not take the long position, because it means that we could get the continuation to the downside. The same story on the hourly chart. Take a look. This market has completed the stop that we discussed. ABCD OP right at the 618 resistance, and the trend line has been tested, and market has collapsed right below this support and hits OP target with this spike, our major ABC top pattern, and complete the 127 of the butterfly. So this is agreement support currently, 1890 approximately, and accompanied by the butterfly. But with the butterfly we have the one problem, is this fast drop down, strong acceleration down, the same as here. When you have the strong acceleration on the 127 butterfly, it significantly increased the chance that market later proceed lower to the 1618, which is 1874. Yes, here is not really big difference. This is just the hourly chart, 20 pips, but we're talking in general. What could happen? This for those who are searching chance to buy somewhere in the current market when anticipating the market could reverse up. If Jerome Powell tells that they are concerned, Fed concerned with the rising interest rates. But this is only the half of the problem. Another half comes from the interest rates. And we said, take a look, market could create the new top here. Major target of the 3 drive is not been completed. And by the Fed meeting, probably this will happen. If even not by the statement, but just on the speculative volatility that will come in the moment of the Fed speech. And this here could be some spikes or something that market could trigger this target. It's approximately 166, 168, this range where theoretically 3 drives should start to work, or it should fail, in the case if upward action will continue. It means that as on the dollar index, as on the euro, on dollar index, it could be spiked up. On the euro currency, it could be spiked down, which in general agrees with the idea that market could hit 1618 extension as well of the butterfly. So if you do not want to wait for position taking, you could consider maybe somewhere around this area, trying to go long with the stops below the recent lows, as I said on the daily chart. But keep an eye on what Jerome Powell will tell. If he tells nothing, or that Fed has no warning about rising interest rates as it was previously, then it will be better probably to either close position if you will be able, or be prepared for deeper action. Maybe market could reach at least the previous low, so market could drop and back down, as I said. If Powell tells that they are worrying about the interest rates and concern, that will be a good moment, and the euro could start rising. In this case, you will get your entry perfect at the current level. So that's actually the balance that we have currently on the euro currency, and you could make the decision what is better. It's up to you. So, but purely technically, acceleration, reversal on the follow time frame chart, all this stuff's in the common conditions, not driven by the Fed, suggest deeper downside action on the market. So that's what we have on the euro.